But Snehi, first off, we must be looking at the international handover because what a day and what a week we've seen coming for the Wall Street, right?
Absolutely, lots of volatility coming in, and not only across Wall Street. You have Asian markets that are lagging. Europe, on the other hand, is holding up pretty well for itself. And commodities are in question. Oil and gold. We've seen a lot of volatility and lots of big moves coming in over the course of this week. But with that, let's kickstart the show with the handover coming in from Wall Street and the European markets. Now let's talk about Wall Street first. Stock futures ticked lower in overnight trading yesterday as the S&P 500 is headed for its worst week in almost 6 months. The S&P 500 has fallen for 5 sessions in a row, bringing its week-to-date losses to 2.2%. Now, it will be the large cap benchmark's third straight negative week and its biggest losing week since 27th October 2023. So that's last year. The S&P 500 is now almost 5% off its 52-week high as well. The market pullback has been largely driven by tempered expectations for a rate cut soon. Economists and strategists now see the Fed waiting until at least September to lower rates and are increasingly entertaining the possibility of no reductions at all this year. This comes after we had the Fed Chair Jerome Powell. He spoke over the course of the last few days talking about how they might have to hold back on those rate cuts. After all, you have various FOMC members, various presidents of various FOMC's divisions that they've been also talking about not seeing any rate cut this year as well, as long as the inflation data is in place, at least until the inflation data is in place. So that's what's hampering the markets as of now. And one big newsmaker yesterday has been Netflix. Now, Netflix shares have fallen more than 4% in extended trading, even after the streamer reported quarterly earnings that were beat on the top and bottom line. Both, we'll tell you more about this over the course of the show as well. Let's come back and talk a little bit more about the markets. The blue chip Dow and the tech-heavy nasdaq composite are also poised for a losing week, falling almost 0.5% and 3.5% so far, respectively. Nasdaq is on pace for its 4th straight down week, the longest weekly losing streak since December of 2022. Companies expected to report quarterly results today morning include consumer product giants like Procter & Gamble, oilfield services named SLB, and financial services firm American Express. This is obviously morning of US timing, so when Wall Street opens early in the morning in the US. But while this was the handover coming in from the US, when you shift focus and look at Europe, very interesting moves coming in over there, because Europe as of now is entirely in the green, exact opposite of what Wall Street has been up to. DAX is up 0.4%, FTSE is also up 0.4%, and the Pan-European Stock 600 index is also up 0.3%. While they're not big moves in the green, they're in the green nonetheless, and completely opposite to what the US did yesterday and what Asia is doing as of now. So some relief when you look at the screen when it comes to European markets, but other than that, US markets are all set to end the week in deep cuts with the red bar. Shreyansi, with that, also take us through what crude is up to, what gold is up to. These two have also been largely in focus over the volatility that we've seen on the equities front. Both of them have also been in focus, so tell us what's happening.
Absolutely, and it's very interesting to see what is playing out in the oil markets on a daily basis and as well as a weekly basis, because what you're seeing right now is that crude oil futures were mixed after a sell-off earlier in the week as traders discounted fears of a war between Israel and Iran that could disrupt crude supplies. So when you're looking at price action, then WTI contract added just 4 cents, settled around that $82 a barrel mark, and Brent as well lost 18 cents or 0.2% thereabout and settled around that $87 a barrel mark. Now, US crude oil had gained nearly 1% to a session high of $83.47 before pulling back. And oil, in fact, sold off more than 3% earlier this week as Israel has refrained so far from striking back against Iran for the Islamic Republic's unprecedented weekend air assault as well, reducing fears of a major war in the Middle East. Now, US crude oil and the global benchmark have fallen below the prices reached after Israel's airstrike against Iran's diplomatic compound in Damascus, Syria at the start of the month, the event that triggered the current round of hostilities. Meanwhile, the Biden administration has imposed new sanctions against Iran's missile and drone program, but the punitive measures have spared the Islamic Republic's oil exports for now, and that is something that the market is definitely looking at very closely. In addition to the fading geopolitical risk premium, then, prices have also fallen this week on a 10 million barrel build in the US petroleum inventories last week, and that is also something that the market is looking out for. But then when you're talking about geopolitical tension and geopolitical tension premium, we must mention safe haven gold because that has gained as persistent tensions in the Middle East added to the metal's appeal despite robust economic data from the US that raise prospects of fewer interest rate cuts. So when you look at price action for gold, spot gold gained 0.9% and was around that 2,382 per ounce mark. Mind you, prices did touch an all-time high of 2,431 last Friday. So we've seen some elevated levels come in and good price action on a daily basis and a weekly basis for gold, but can't say the same about oil at all.
Well, absolutely spot on, very well put, and very well summarized with everything that's been happening. But with that,
if you like this video, then like, share and subscribe to ET Now.